Hello, this is a monthly review and outlook of Turkey ferrous scrap markets from Metal Expert. Today we will talk about current price trends, oversee deep-sea contracts market for Turkish ferrous scrap, look into steel mills margins, and finally, we will present you Metal Expert's scrap price 3-month outlook. So, let's deep into current price movements in Turkey. Looks like benchmark for American HMS 1 and 2, which is marked red, has been more or less stable since early April. On contrary, iron ore prices in China were on upward trajectory, fueled by over-optimism for new stimuli. But apparently this bubble is blowing off right at this moment. Historically, current ferrous scrap prices are on average levels, which is definitely not bad. Overlooking deep-sea contract market. Metal Expert covers the most significant booking in the sector. Turkish steelmakers returned to the import scrap market in May, as they needed to refill their stocks after a poor buying campaign in April. Last month, Turkish steel producers booked at least 31 deep-sea cargoes for a total volume of over 1.1 million tons. It was 500,000 tons higher than in April. The purchased cargoes were scheduled mostly for June shipment, with several batches booked for July loading. We cover not all the contracts concluded on the market. Those deals we report are the most resonating and provide base ground for changing price benchmarks. But, what is even more important, we comprehensively study each deal, asking our sources for cross-checking details. The first part of May was generally silent, as Turkish mills preferred to postpone deep-sea scrap bookings amid an adverse situation in the finished steel segment. There was a lack of rebar sales, so nobody wanted to have great scrap stocks, and the majority decided to wait and see. A source from Turkiye told Metal Expert. Scrap collectors, in turn, were trying to spur the material flow to the yards and have increased their dockside tags. However, in the second part of the month, the importers accelerated scrap purchases as they needed to restock on the material for June shipment. The producers managed to obtain some discounts, which also influenced better activity. The mills were gradually booking the scrap, but after a slight downward correction, the prices were generally stable. While the mills have tight margins and low demand for longs, the scrap exporters kept facing slow collection, a Turkish scrap agent told Metal Expert. The very start of June was silent in the Turkish ferrous scrap segment. The trade has resumed shortly in the short term, as the steelmakers need to restock ahead of the upcoming holiday period. By Metal Expert's forecast, steel scrap prices in Turkiye are expected to decline by $10 to $15 per ton in the coming months, amid restocking by local steelmakers, the recent weakening of steelmaking performance, and worsening demand for finished steel on the spot market during the summer period. We can mark 4 factors to support this view. First, Turkish steelmakers managed to replenish scrap stocks in recent months. Next is that Turkiye will keep crude steel production high in the coming months. Turkiye spot finished steel market remains sluggish, except for governmental purchases, which are going to expire in September. And finally, Turkish mills have managed to ramp up long steel export this year by 33% year-over-year to 2.3 million tons. That's all for today. Thanks for watching. See you next time.